GM fam, today is Friday, December 13th. It is almost a new year, but today is still the first day of the rest of our lives. And we are excited to be joined by the one, the only Credible Crypto. If you've been following Credible Crypto for any amount of time, you'll know that he's got some amazing takes on all things how to trade crypto. Been a big booster of Curve in particular recently. So we wanted to invite him onto the show. Mr. Credible, how are you doing, sir?
I'm doing well. Thank you for having me.
So for those of the audience who aren't familiar with you, could you give a bit of a background? Like, who are you? How do you get into crypto? Things like that.
Yeah, sure. So I'm a crypto trader. I've been doing this for about 7 years now. Got into crypto first in 2017 and kind of joined crypto when Bitcoin was trading about 3 to 4K before the big rise to 20K. Bought my first Bitcoin within that region at 3 to 4K, sold everything at 11K. Right before the run up to 20K, decided that I didn't want to make that mistake again. And that's when I dived into technical analysis 7 years ago.
Excellent. And what first kind of got you into crypto? Was it just the possibility of eye-popping gains, or was there something fundamental about the ethos of crypto that got you excited about it, like the decentralization, permissionless nature? What resonated about crypto with you?
Yeah, so at the time I was investing in stocks for the first time in a long time. So I was just kind of learning about the world of investing, getting my toes wet with traditional finance. And I had talked to some friends and family about Bitcoin maybe a year or two before that when Bitcoin was trading at under $1,000. And for the most part, I ignored it, didn't really understand it, but was aware of it. And fast forward to 2017, and I was talking to some family about Bitcoin again. And cousin had mentioned that Bitcoin is trading at $3,000. And again, this is like the fourth or fifth time I'd heard about it. And the first 5 times I'd heard about it, it was trading at $200, $400, $1,000. And so I was like, you know what? I've ignored this thing for long enough. Clearly, it's not going away. It's now trading at, 10 times what it was when I heard about it a year or two ago. And I said, I really need to start looking into this. And so it was definitely because I was investing in things at the time. And I saw that this was an asset that was clearly slipping under my radar that obviously had the potential for massive gains. And so that's kind of what intrigued me initially. And then when I looked into it at 3 to 4K, learned about it, I thought, you know what, this tech looks pretty interesting. It's something that we haven't seen before, and clearly it's not going away. Maybe I should dive deeper. And that's how I got into it to begin with.
That's amazing. Now, if you were in about 7 years ago or so, you should be retired right now, right? What brings you back here into this grind?
Yeah, so initially when I got in 7 years ago, I like I said, I dabbled into Bitcoin at 3 to 4K. I only bought a single Bitcoin at 3 to 4K, and then I sold it at 11. So I'd made like $5,000 or whatever, which was nice, but it wasn't life-changing gains or anything. I then later on in that year put $5,000 into XRP at 22 cents. XRP would then climb to $3 and some change, and then I sold everything on the way down at $2.22. So I made my first big win was in XRP, and I made about a 10x, converting 5,000 to 50K. So I had at that point about $50,000 that I was playing with, and then of course Uncle Sam, so I had to pay my taxes, and that 50,000 became a lot less. And then that was essentially the top of that cycle, right? So 2017, we had a big pump on everything after, and then everything came crashing down. So at that point, I had a little bit of capital. I didn't have a ton, and I was still very, very new to the trading game. So I was learning, and I wish I had gotten a little bit earlier. I might have been retired, but at that point, I was kind of playing with maybe $20,000, $30,000 at the top of the bull into the bear. And so throughout that period, I then started learning how to trade. And I think all that has kind of built up to where we are today. I think if I'd gotten the cycle earlier, I may have been retired now, but unfortunately, that was not the case. Fortunately, I got in when I didn't have had many, many years to get ready for the moment that we're now seeing.
Absolutely. So I've spent a lot of time following crypto. I don't spend a lot of time trading it because I've noticed that the bull bear cycle is just brutal. So you get these short 6 month to a year windows where everything's going up and everyone's a genius, and it kind of doesn't matter whether you're picking smart quality tickers or just random garbage. It all seems to go up. And then you got 3 years where you just have to suffer and grind it out, which we had. And before 2020, we've just gotten through the most recent bear cycle, perhaps recently. What is your strategy for kind of trading during those bear markets? It seems like there's nothing you can do. You're just kind of doomed and everything goes down. But you're like a master trader. How do you handle it?
Yeah, so you definitely have to change your approach when it comes to trading in a bear market. Typically, the way that I look at markets is they're either trending or they're not. Right? There's only two different possibilities. When the market's trending, it's pretty easy, relatively easy, I should say, to trade it because you have clear levels of invalidation. Price is generally just constantly going up, and so you can kind of enter and exit pretty relatively easily in a trending market. When a market's not trending is when it gets very, very tricky. And this is probably where most traders struggle because it's a position in which there's not a ton of liquidity flowing. You have buyers and sellers kind of neck and neck, and neither of them is winning. And so you get this you get this choppy price action where price kind of goes up and down and constantly hits invalidation levels and stops people out and reverses again. And that's what makes trading bear markets difficult. So the key is that you kind of have to switch your mindset when you notice that's happening to a mindset of trading a trending market, which you do in one way, and then trading a ranging market or a corrective market in another way. And sometimes it's hard to make the switch between those two because you're so used to the market moving in one way versus moving in another way. And that's kind of the trickiest part. And then a lot of people just struggle to trade choppy markets regardless because they're so used to the easy gains of a bull market that when things change, they can't typically adjust. And then they get worn out in the chop. And then we know that the biggest gains in a market happen during trending markets, and those happen maybe 20% of the time. The other 80% of the time is this kind of choppy ranging price action or this sideways price action, whether we're in a bull or a bear market. And so kind of being able to recognize the difference between these two environments in the market and trade them in different ways is, I think, what determines whether you're end up being successful or not.
Got it. Do you have any like case, not case studies, but just like examples of how you did? So just for example, like I think 2021 or 2022 was like the dreadful year where everything went 2022 where like everything went down. There's like nothing you could be in. From my perspective, like everything went down 90%. So I just like lost a ton of money. During that like huge nuke, how did you fare?
So it kind of goes in context with the way that I trade the markets is you're looking at Bitcoin to kind of be the driver of the entire market, and then where Bitcoin goes, most everything will follow, at a higher level. So, for example, in 2021, we were at 69K, 60, 65, 69. I was expecting a big correction in a 30 to 40. So I was kind of anticipating that, and my thought process was, we get this big correction. Following this big correction, we're going 100K plus. So I was looking to buy the dip. So we dipped down to 30 to 40K. I bought the dip on alts like CRV. And then obviously we kept falling. And I was not expecting that further crash to 15K on Bitcoin, but we got it. And so because we got that breakdown at 30 to 40K, everything went down with it. I saw significant drawdown on my spot portfolio, as I think many did. But my plan has always been since 2017 to accumulate spot and not sell to the end of the macro cycle, which to me was Bitcoin over 100K, which we're at today. And so for me, my strategy was I'm not touching spot. A lot of reasons, partially because of tax reasons and other situations like that. But I have a separate trading portfolio. And so I'll actively trade, when there's drawdown, but I'm not touching spot. So as one of the guys in the comments said, yeah, I did buy curve at $5. I bought a lot of curve at $5. And the plan was simply hold that until the cycle ends. If Bitcoin had held 30 to 40K in 21, I think that $5 buy would have been a steal. Obviously, Bitcoin didn't, and it came down and everything did with it. So yeah, my $5 buys went underwater. I just took that as an opportunity to add more. So now we're rising back up. I think we're going past $5, and I've loaded up maybe 5 to 6 times the amount of CRV that I had back then. And again, like always, the plan has been to sell when I think the cycle is over. We're getting to that point with Bitcoin over 100K. We still have, I think, the best times coming. But yeah, I think you have to just have a plan. A lot of people probably bought in 2021, 2022 on the way down and then capitulated at the bottom and they took a loss. If you didn't capitulate and you had a plan and you stuck to the plan and the market's now rising, you should be back in the green and ideally much, much higher in the coming months.
Interesting, interesting. So when you're evaluating these different assets, you mentioned, for example, XRP, you've talked a bit about Curve. Like, what are you looking for with these assets? Like, is it fundamentals? Is it some sort of like momentum? Like, what's your thought process behind picking a good asset from all like 99.9% of it out there is garbage, right?
Yeah, so for me, it's pretty simple. I will trade anything that moves, whether it has fundamentals behind it or not, because trading in the short term, at least, I think is primarily dictated on what the charts look like. So as a trader or technical analyst, I'll trade anything that moves. However, if I'm holding something in spot, that means that I have confidence in it. That means that I think that it's going to last for the next few years, because if you are holding spot in this type of market and you're holding it through multiple periods of ups and downs, you have to be okay with seeing that sort of drawdown like we saw in 2021, 2022 on most alts. It doesn't really matter what your alt was, whether it was, the future of France, or whether it was a garbage meme coin or a scam or a rug, it all went down. And so if you don't have that confidence in the asset that you're holding for the next 2 or 3 years to weather those drawdowns, you will probably be one of the people that bought the highs and sold the lows. And so when it comes to spot holdings, I need to understand the protocol. I need to have confidence in the protocol, and I need to believe that the protocol will be here, 3 or 4 years down the road. If I can't say that to the protocol that I'm talking about, then it's not going to be in my spot portfolio. It's just going to be something that I trade.
Got it. So starting with XRP, did you really have the confidence that XRP was going to survive? Because when you first bought it, it got hit by like all the SEC lawsuits. It was getting smacked down, and for a token which was essentially supposed to kind of onboard a lot of the financial sector into crypto, it seemed like there was like almost no path for it. Nowadays, like it's looking like smooth sailing for Ripple. So it's like it has actually survived. But if you ask me to bet, like 8 years ago, would Ripple survive? It would have been like at best 50-50. Did you actually have that confidence in Ripple, or were you just like completely out the whole time?
Yeah, so I currently hold, I mean, I've been holding spot XRP for years now. And, fortunately, before this rise that we saw, I topped up my bag, and I'm currently holding more than I ever have. But yeah, it definitely stemmed from, I think as someone who's, an entrepreneur and has had their own businesses before, I kind of see the value in running a business the way a business should be run. I mean, example is a lot of times with what we've seen in this space is, coins like to operate as DAOs. Curve itself is a DAO. And in some cases it can work out, but in other cases you essentially have a mass of people that may not quite understand what they're talking about, or may not be well educated on the protocol that they're governing, making the decisions. And I don't think that's always necessarily the right way to go. So a lot of people in this space have that ethos of decentralization, and this is why they hate XRP or they hate coins like HBAR, because they say that they have essentially like a governing council or a board that's kind of pulling the strings, and this goes against the ethos of decentralization. But coming from a background in business, I understand that sometimes there's certain people that are qualified to make decisions, and others that may not have that ability or that knowledge or that focus to drive a protocol the way it needs to go. So for me, I know Ripple was always viewed as a centralized coin, but you understand that they can't control the X Ripple, they can't control the actual network. There is a company that's kind of pulling the strings in the background, helping decide the direction of the coin. But I see value in that where most don't. And so for me, looking at the board of Ripple with the 43rd treasurer, I believe, of the United States, and then all these high level people there that essentially have experience and know what they're doing, made me pretty confident that there's something behind Ripple and XRP. And I kind of looked past the initial FUD and the hate around it and kind of dug a little bit deeper. And I said, these guys have a massive war chest. They have all the money in the world that they're going to need to make this protocol a success. They have a board full of very, very experienced people who are putting their name out there and associating it with XRP and Ripple for a reason. And now they're fighting the SEC, and they've basically won. It was always sort of confidence in Ripple and XRP as well that's kept me holding on to for all these years.
What about the upcoming release of the RLUSD Ripple stablecoin? How do you think that's going to play into things?
Yeah, so I think it's great. I mean, I love it because obviously when I hear stablecoin, I think Curve, and obviously CRV is another one of my big holdings. So that makes me excited. I think and I also, they've said that it's going to be backed by the US dollar, et cetera, and it's going to have regular audits. And I think that sort of clarity is something that we don't have in the space right now. Of course, we have Tether and we have USDC, but I don't know. I'm not an expert when it comes to stable coins. I have heard all kinds of things about Tether and this type of FUD and that type of FUD, and it would be nice if there was just simple clarity with in terms of like audits and stuff like that. Which again, Ripple's a public company, so it makes it even more believable that they're going to have this thing, very very clear and audited and locked down. So that gets me excited that finally we have a stable coin in the space that is essentially been created by a company that is public in the US, and so has to follow certain regulations and audits. And so that gets me excited. How big it will get or how rapidly it will spread, that I do not know. And I don't want to speculate on that, but I have high hopes that it will be a major player in the future.
Right on. Let's go ahead and move to the subject that I spend the most time following, which is Curve. You mentioned it a couple of times, and anyone who's followed Curve knows that, like, as a token, the price action has just been abysmal, right? Like, it got up to $5, and then it probably like tanked harder than almost any DeFi coin. It got on top of that, it suffered through like the Viper exploit and then the Mitch liquidation and everything. And at the absolute bottom, just like a few months ago, it was like in the 20s of cents. Um, so like during this prolonged bear market, for me it wasn't like terribly tough to hold it because I'm in like a lot of the different like VE CRV wrappers, which give me pretty good cash flow. So it was actually like pretty bearable. Like, it sucked that the price was down, but I was getting like revenue streams. But you're not in a lot of the like wrappers or anything like that. You're just holding Naked Curve.
Great question. So I saw in the chat as well, DeFi Advisor had asked the question about the wrappers. So actually, I did have my CRV, all of it, as CVX CRV for a long time, and so I was getting the revenue like you said, weekly or biweekly, and then I also had CVX that I've locked for multiple rounds, and CVX I got in at $5, not recently, but a couple of years ago before it went to 60, and so yeah, I have used I've used the wrappers both for CRV and I've used them for CVX as well. And I think, like you said, that's what made it so much easier because for CVX, for example, getting in at $5 before they were up to $60 and locking it, I think I locked it for at least 3 to 4 of the 4 month rounds, so at least for a year. And by the time we were coming back down in the bear market, the revenue that I earned from locking CVX literally completely covered my cost basis on my original buys at $5. So I was essentially running on house money, as they say, right? Like I'd been able to pull out my initial investment, and it was all essentially like a free ride at that point. Now CVX obviously came down from 60, went back down to $2 or $3, and I just loaded up more, like I did with CRV. So now I'm running it back up once again, this time with a multiple of the amount of CVX that I originally had. And the same can be said for CRV. I had it locked as CVX CRV for at least a year, was earning the revenue from that as well. I think about 6 to 8 months ago, I tweeted out about the liquid wrappers, and I said that for those who are planning on selling CRV in the coming bull run over the next 6 to 12 months, you need to pay attention to the wrapper peg. And if you're planning on selling your CRV in the next 6 to 12 months, odds are the peg is going to drop as CRV rises. And I explained that in a tweet, the logic behind that. And so I converted all my CVX CRV back into CRV maybe 6 to 8 months ago. The peg was down 10% of the time. But I said, you know what? It's not worth the uncertainty right now because I expect CRV price to rise. So I'm going to take the 10% loss and I'm going to convert back to CRV. So I currently hold all liquid CRV. And as you can see from the chart there, the peg has dropped significantly on this rise. And that's just a natural expectation because as the price of CRV rises and people want to take profits, they'll need to swap their what was dormant CVX CRV earning them passive yield into CRV to cash out. And because they're swapping, that's going to cause the peg to come down. And so I expect essentially this sort of depeg to happen on rising CRV prices. And I only expect it to potentially continue as CRV keeps pumping to new all-time highs. But yeah, I've taken advantage of both of those things. And I think that was probably a pretty good reason why I was so comfortable in my bags as price drew down over the last couple of years.
Yeah, that's a very good timing if you manage to get out. Do you like actually have any like expectation as to when this repeg might happen? Is it only going to kind of repeg on the way down as like the next bear market hits, or do you think that it'll actually catch up sometime in the bull market?
Yeah, so I'd like to think that it would catch up in the bull market, and I hesitate to say much more than that because I don't want to tell people it's not going to catch up here, and people start selling their or converting their CVX CRV at a 30 to 40% loss, and then it pumps, like a couple weeks from now. But I mean, logically, I don't see why it should necessarily repeg if CRV is so bullish and pumping as I expect it to. Like I'm expecting double-digit CRV, which means we have a long ways to go. And if that's the case, then I can't imagine a scenario in which we repeg with CRV just pumping to the moon because again, as CRV pumps at this stage in time, people are going to be interested in taking profits more than letting it sit dormant. I think that kind of flips when we're in a bear market because in a bear market, people are settling down to hold for the long term and they're thinking, what can I do with my CRV while prices are falling and I don't want to sell? And the answer to that is convert it to CVX CRV and earn that passive yield. So I think it is just two different environments, and I think naturally in a very bullish market environment, the peg will get worse, and in a more bearish market environment or in a time of more quietness, then the peg will kind of it'll repeg naturally. So I think that is probably what I expect to happen. Obviously, I could be wrong, and yeah, I wouldn't like tell anyone to do anything right now based off of my thinking, because who knows? Maybe we repeg a week from now and CVX CRV is back up, 20 to 30%. So
Got it. Got it. So you said that you expect Curve to hit over $10. What's your thought process on this? Is this something about the fundamentals of the ecosystem, or just based on the way you're seeing it trading?
yeah, so two things based on the way two things, the technicals, the charts, and then secondly, I always look at market cap. And I always tell people you can't really use market cap as if you look at market cap alone in this space, it all looks way overvalued. Like everything looks overvalued, like crazy. But there's like maybe two or three protocols that actually trade at a decent valuation compared to what they fundamentally represent. But most protocols are way overvalued in this space. So people will sometimes compare, crypto protocols to a traditional finance company and be like, I think, what did I see today? Like Fartcoin is worth more than 33% of traditional stocks, something crazy like that. And then be like, CRV, there's no way it can get to $10 because the valuation would be like three times like whatever XYZ stock. And I don't think that makes any sense to compare. What I do think makes sense to compare is CRV valuation relative to other cryptos, because now you're talking about an asset compared to other cryptos in this asset class. And when I do that and I look at CRV, which I think right now is at a 1.5 billion market cap, if I'm not mistaken, but earlier was at 300 to 500 million back at the lows. And when I look at something like CRV, that is an actual protocol that serves an actual use case, that generates actual revenue, that has actual users, and currently trades at maybe a 1 to 1.5 billion market cap. And then I look at something like SHIB or Doge that's trading at, I want to say SHIB is like 10 plus billion market cap. Doge is obviously a lot higher. And then I look at CRV at $10. I'm like, yeah, it's gonna happen. And then I look at the chart, and the chart tells me that essentially $6 is the start of the run. And it just like there's no reason why it shouldn't happen at this point.
Got it. So we got a question coming in from X from user Manasada, who says, I just couldn't understand Curve. And first off, if you're interested in understanding Curve, shoot me a follow. I'm Curve Cap. I do a lot of educational materials on how Curve works, because it's not the most intuitive thing for newcomers. But let's hear it from you. What's the kind of elevator pitch for someone who sees Curve and might know a little bit about it, knows it's something in DeFi, but doesn't really understand what's going on under the hood?
Sorry, can you repeat that question one more time? I was reading the comments and then I missed the question.
Oh yeah. Manasada is just asking, I just couldn't understand Curve. What's Curve 101 for beginners who don't know much about Curve?
Got it. So basically, the main focus of Curve is it is a DEX first and foremost, so a decentralized exchange. So you have exchanges like Coinbase and Binance that are centralized exchanges where you send your assets to be custodied by these exchanges, and then you can trade within them. Curve is primarily a decentralized exchange or a DEX, so it allows you to trade and swap between coins while you currently hold them in your own wallet. And a little bit deeper into that, Curve is specifically focused on stablecoins primarily as a DEX. So you have something like Uniswap, which is probably the most DEX that most are familiar with, that allows you to swap between very volatile asset pairs. Curve kind of focuses in on the stablecoin niche, and so that's kind of the 101 of Curve. And then they obviously charge a fee for that, and they pass on a portion of that fee revenue to the token holders, and that's what brings the token value. They generate, if I'm not mistaken, and you can correct me on this if I'm wrong, because I know you're more familiar with this, but I think 25 to 50 million in revenue annually. And again, those numbers may be a little bit outdated or old, but I think that's about right. So they're generating an actual profit through the use of their DEX, and then again, a portion of this gets passed on to the token holders.
Nice. That's a very good explanation. There's a few other cool nuances, which is that Curve is also a stablecoin issuer that has its own stablecoin, which is built off of its own lending protocol, which makes it a little bit like Aave comparison there. The particular value of that of that stable coin is that the lending market is it comes with the built-in liquidation protection, which means that if you all of a sudden see a sudden price nuke, you're not going to just completely be liquidated and lose all your collateral. You might lose maybe a few percent, depending on how you set your parameters over a series of time. So it's a very friendly mechanism. With regards to revenue, you were asking about, I'm getting these stats courtesy our friends at Curve Monitor, who do a very cool like chart that shows the breakdown of Curve revenues, and you can see what we've basically seen was like through the bear market, of course, like things dipped a bit, but then it's been growing, but pretty much about 500K per week, about half of that coming from DEX trading and half of that coming from Curve USD lending fees. So good, strong sources of revenue that are fairly diversified, and that gets passed back through to VECRV holders. Or if you have one of the various like Curve wrappers, it also flows to the owners via the Curve wrappers. So like, depending how you want to play it, like I rode out the bull market, I rode out the bear market by just getting revenues from the various wrappers and from some VECRV. But now that like Curve price is like going crazy, like maybe I'll like, maybe sell some off, or maybe I will like use Curve's own lending markets to borrow some Curve USD against it.
Yeah, and you mentioned the stable coin and then the Aave like lending that Curve has as well. And yeah, those I should actually have touched on those. Those are two of the other big use cases for CRV, growing use cases. And I think a lot of people aren't aware that the deliquidation mechanism that Curve has created, essentially like revolutionary. I don't think any other lending protocol currently uses it or has it. And they were the first ones to create it, and it's genius. I mean, for someone who that actively trades, I can see the value in it. I know a lot of people who don't actively trade may not understand what the benefit is to something like this, but yeah, it's these types of innovations that Curve keeps building that make me so confident in its future. I mean, they are pioneers in every sense of the word, and when they develop things like this, it just tells me that these guys know what they're doing and they're leading the way.
Yeah. So one of the cool things about the the lending markets on Curve is that they all, or not all of them, but a lot of them come with like built-in leverage. So you can, with one click, get like extremely high leverage. Let's see, I'll just go ahead and reverse sort by leverage here. You can see like for like some stablecoin borrowing markets, you can get up to 50x leverage, 15x on gold. Have you used any of these like leverage markets in your trading? Like where do you do most of your trading?
Yeah, so I personally have not used them because I trade actively on centralized exchanges. The access to leverage and liquidity is kind of essential for me as an active trader. But I think for someone who's kind of a more passive trader, not as aggressive as I am in terms of daily trading, I think something like this would be very, very useful. Again, for me, because I trade actively like every day and trading 10 to 20 different pairings. For me, a centralized exchange or maybe a perp dex is a little bit more useful, but I can see this being useful for people that are maybe not as active traders as I am, but still do dabble in trading here and there.
Got it. Very cool. Very cool. Let's see. So there's a question coming in asking about the how bullish is the BlackRock partnership? Crypto Daddy asks, what do you know about the BlackRock situation with Curve?
Yeah, so my understanding on it is the word partnership, depending on who you ask, can mean a lot of different things. And so my understanding is not necessarily that Curve has directly like talked to BlackRock and they've signed some sort of agreement or partnership in that sense of the word, but rather there is a protocol, as you're showing here, called Elixir that is allowing for the tokenization or a bridge between BlackRock's tokenized BULL product and Curve. So in some ways, it is you can maybe say, I don't even know if collaboration is the right word, because I don't think that permission necessarily needed to be taken from BlackRock to do this. It's on DeFi, so it's decentralized, and so I think this is more of a. I don't even know what would you say this is, because I wouldn't necessarily call it a partnership per se, but what would you call this exactly?
It's kind of an interesting case, right? Like I feel like it's the case where with a lot of these organizations, like they don't directly like do the dirty work, right? Like, so it's like a lot of work, like engaging and interacting on chain. So I feel like they are partnering with this other company. This other company is using Curve. So they're sort of like indirectly using Curve.
Yeah.
But there's still all sorts of speculation and rumors that BlackRock is buying up Curve token. I have no idea if that's true. I'm sure you could probably check. I don't think they're buying it on chain. I think you would probably notice. So
Yeah, makes sense, and I think you kind of nailed it. There's a little bit of nuance there with the partnership per se, but yeah, I mean, at the end of the day, I think it's a bullish thing regardless.
Right. So basically, the cool thing about it is you mentioned that Curve like has a particular facility for stable coins. Like the initial Curve product that it launched was a stablecoin exchange, because basically Uniswap has this X times Y equals K formula, which is great for volatile assets, but it doesn't work so well if like the stablecoin is redeemable, because it quickly moves off price. So it just like creates like this like arbitrage opportunity. So Curve's bread and butter has always been its stablecoin exchange. It's one of the reasons it just like collects a small trading fee from that, prints stablecoins as revenues. So it's always got like a lot of stables in the bank, which helped it out during the bear market. Now, as you can see here on screen, like Elixir has this DEUSD product, which is itself like a stablecoin. BULL has about 500 million of institutional investors who have bought into the BULL fund, and they need to earn a return on that somewhere. So it's DEUSD is like a prime way that they're doing that. And Elixir is using Curve as its primary liquidity hub. There's about $110 million worth of DEUSD, and 64 million of that is sitting on 4 major Curve pools: DEUSD paired with USDC, USDT, DAI, and Frax.
Yeah, so you breaking it down, I actually hadn't seen this article. So you breaking it down like that, it makes a lot of sense, and that gets me excited because again, it just proves that Curve is the best place for stablecoin swaps with all the liquidity, or most, I should say, most of the liquidity, or a little bit over half the liquidity of DEUSD on Curve pools. Basically, again, solidifies Curve as the place to be swapping DEX coins on chain, stablecoins, sorry, on chain. So yeah, it's great to see. And again, every swap that's done through Curve ultimately ends with some of portion of that fee revenue being paid back to Curve lockers. So yeah, it's a great thing to see.
Yeah, you definitely have to subscribe to the new Curve news site, where there's been just like a tremendous amount of really good articles. One that I think you might find interesting is every week they're trying to publish these articles about like just the best pools for Curve yields, and some of them get pretty bananas. Like so I'm not a big trader, as I mentioned, but I am a big like yield farmer. And nowadays, like the yields on stablecoins are kind of bananas. Like you can see here, like this pool here on Ethereum is between Usual Money's USD3 and S Curve USD, which is the new Savings Curve USD. So the Savings Curve USD by itself is earning about 15% yield. And then on top of that, there is like additional yield that you can get from just like various like Curve incentives that are applied to try and bootstrap liquidity. These so like follow, bookmark the news site if you're a yield farmer, because there's like the fact that you can get above 15% yield on stable coins, like it's definitely a sign of the like weird market euphoria we're in. But like you could interpret that in many ways, but basically it's like that's how I just interpret it as like that's how bullish traders are on Bitcoin, is that they're like willing to borrow at crazy rates to because they expect that like Bitcoin, Ethereum, etc. Gonna be going through the roof.
Yeah, that's actually crazy to see that type of yield on a stable coin. But like you said, I mean, it makes sense in bull markets because people want that money to buy more Bitcoin, to buy whatever favorite alt they're looking at, because everything's going up, and so they're ready to pay what we consider pretty high, relatively insane yields for access to this capital, because they believe they can make multiples in a much shorter period of time. So it makes total sense. And I'm not really involved in yield farming right now, but I can see that being something that I'll be looking at, post bull market, when I'm looking to deploy a lot of stables. So yeah, it's good to know for sure.
Yeah, and it's not just, by the way, like isolated to Curve. If you look at Aave, for example, rates are also through the roof. This is just kind of like a market-wide phenomenon because things are crazy. Going back to like the BlackRock case recently, like one of the things that I've noticed, and like again, like I don't follow trading, so you probably know more about this than I do. But like in the past like few weeks, let's say, like Bitcoin's been kind of like dancing around 100K, just kind of shooting back and forth. Ethereum's been like dancing back and forth around $4,000. Yet at the same time, like if you look at the ETF flows, it's like huge amounts of like buying activity from Wall Street. So is what's happening that like retail traders are just like literally selling to Wall Street at this point?
Yeah, so interesting question and observation. And actually, I think it's, yeah, so I see this on the timeline a lot. Massive ETF flows, sailors buying, the ETF money is flowing in. Why is Bitcoin stuck at 100K? Why isn't it breaking through? And the same can be said for ETH. And I think one of the factors that people are overlooking is long-term holders' supply and what they're doing with their Bitcoins. So you can actually go and look at there's websites like lookintobitcoin.com that have all the data that show you, on-chain wallet activity for Bitcoin and other assets. And you can actually go there and take a look, and you can see that, up until recently, long-term holders, meaning those that have been holding their Bitcoin in their wallets unmoved for over a year and a half, I believe it is, they had accumulated up until recently maybe 70 to 75% of all the Bitcoin in existence. And their strategy is always the same. They accumulate in bear markets and then they slowly sell in bull markets as price rises. And so I think that you can actually see as well, there's something called a shadow map, which shows you when wallets that have been dormant for 5 to 10 years start moving Bitcoin for the first time. And usually this is to sell. And so you can actually see that at these highs that we're at around 90 to 100K, you have a lot of dormant wallets waking up that have been inactive for anywhere from 5 to 10 years, waking up for the first time and moving coins around. And again, this is typically to sell. Usually these guys aren't moving coins around unless they're looking to move them to an exchange to then sell. And so I think actually more so than retail selling into these flows, it's actually long-term holders. And you can actually track the percentage of Bitcoin that they hold, and you can see as it goes up and as it goes down. And we've seen that on this rise from essentially 70K to around 100K that we've been on, long-term holder supply was declining pretty significantly, which tells us that these long-term holders that are typically accumulating are selling on this rise. And so I think that is actually probably the biggest counter to the flows that we're seeing. And that is probably what's keeping price relatively suppressed right now.
Okay, so before we move off of Curve, I wanted to get to a question from our buddy Arrow, who Arrow went to the urine Y curve, so all the curve pegs are like getting hammered right now. But he offers this question that I thought was really smart, and we just wanted to toss it out there, see if you had any thoughts. The counterpoint to your argument would be like, hey, you can get all this revenue from VECRV at a discount, and then it gets arbed up, at least closer to 1-to-1 for where it is now. So for me, like, I'm kind of like irrationally long curve. Like I'm like, I'm my like whole crypto philosophy is that fiat is broken, and I want to like over time migrate all of my fiat eventually into crypto at some point. So when it's bear markets, I just want to get more tokens. When I see like the curve wrappers at like a 50% depeg, and I'm not planning on like have no need to sell for at least like 10 years or anything like that, like I just take that as a buying opportunity. What are your thoughts on like the this potential like point from Arrow?
Yeah, so I think that the point is sound, and I don't disagree with it. I think it's a matter of time until we see a repeg. So make no mistake, I'm definitely not saying that the peg is going to last forever. And I definitely think that there's a point in time where we're going to see a shift from those that are looking to sell CRV at the pumps to those looking to lock CRV in for a bear market or for a longer period of time. And when we see that shift, I think that the market will repeg and the peg will go back to 1-to-1. But I think the key really is that it makes sense. You're getting essentially a V curve at a discount, and you know that at some point it's going to go back to, or I believe that it'll go back to a full repeg. However, you're measuring the gain of that discount or the value of that versus potential gains from CRV pumping in the short term, right? So it's kind of a short term versus long term gain. If I think that CRV is going to $10 in the next 6 to 12 months, then I'm looking for 1,000% increase in CRV. And so irrespective if I'm getting a 30 to 40% discount V curve, to me, it still makes more sense to hold CRV because I think that I can get 1,000% gain instead of a 30 to 40% discount over the next 6 to 12 months. So if you look at it that way, and if you really do believe that we're in a bull market and everything's going up, and you believe that CRV is headed to all-time highs, then despite the discount that we currently have, your incentive to lock more right now may not be as great as your incentive to hold short term to capture those quick 5, 6, 7, 8, 9, 10x gains in the next 6 to 12 months. And again, I think at some point that's going to change. So maybe when CRV hits 10 plus or 12 or 15 or whatever it is, and you think, okay, now we're possibly reaching a local top for this cycle, or I think the bull market's going to end soon. Now I want to take all the money that I made maybe on CRV in the short-term price rise, and I want to use all that money to now buy up V curve at a discount. Hopefully, maybe at that point it's still a 30 to 40% discount. And now it makes sense to shift from holding short-term CRV to locking your CRV as V curve for the long term and earning that yield. So there will be a point in time where the tables will turn and the shift will make a lot more sense than I think it does now. And I think when that point comes, we'll see a quick repeg. And so, yeah, I don't think that we're going to be depegged forever. I just don't think that necessarily we're going to see a repeg as soon as maybe most are expecting because of the current market environment expectations for CRV in the short to midterm.
Nice. And I can, yeah, I'm not a trader, but I do notice one trend, which is that our numbers on X and YouTube are up only. We're nearing 10,000 total viewers right now, which is amazing. But it's still rookie numbers. Let's get up to 100K. So everyone take a second to like this, share it, retweet it, leave some comments. Just do whatever you can to get more people watching this. Because if we get up to 100K, bear market's over, bull market is guaranteed. There's some good comments coming in from Warren Francis. So I'm guessing Warren might not like understand a lot about the curve supply, and asking, is the curve supply unlimited? And if so, how are you worried about inflation? So one of the things that like I found super interesting when I first like discovered curve, I discovered curve like about 4 or 5 years ago, and I was like a Bitcoin person at the time, and then I was interested in Ethereum, but like I didn't. When I saw DeFi was actually like having its DeFi summer, I was like, okay, Ethereum's day is here, and I came across Curve, and one of the things that was really cool about it is that the emission schedule almost exactly matched the Bitcoin emission schedule, except it was smoother. So Bitcoin has these halvenings every 4 years. Curve used the same similar like style curve, but it reduced it to every year it would have like a similar reduction in emissions such that it approximated this halving rate. And it continued this halving rate all the way through up to 300 years from now. So if you actually like follow the curve emission schedule, a lot of it has already been emitted because we kind of passed that first 4 years where it's like the most wild emissions. So as of 2026, there will be 115 million of the 300 million total curve. But from there on, it's like a 300-year drop-off until 100 years from now. There will just be one CRV token emitted in the year 2133. So it's like kind of fun to think about. I'm planning on being alive for it. I don't know if everyone is. So make sure you touch grass and stay healthy if you are planning on witnessing the end of curve. What's your thoughts on like the emission schedule? Have you seen, as curve has had some of these reductions, have you seen any like effects on the price?
Yeah. So like you said, this is like one of the first things I discovered about curve, and one of the biggest like areas of confusion for people that are new to it, because people talk about how curve is like this emissions token with like some crazy high level of emissions, and therefore price will never rise. And like you said, if you actually looked into it, the emission schedule is modeled after Bitcoin. It's literally modeled after Bitcoin. It's smoother because instead of, like you said, the 4-year cuts in emissions, it's annually. But yeah, by that logic, Bitcoin is an emissions token that never should have risen in price, right? Obviously, today we're at 100K, and we can see how clearly wrong that sort of thinking is. But yeah, the reality is that curve emissions were high for the initial years, like Bitcoin was, and over time they'll decrease and decrease and decrease, and over time they'll become a lot more scarce. And these emissions will continue on, like you said, way past 2100, so for hundreds of years. And so emissions is not a concern of mine at all. Because like I said, it's essentially what we're seeing with Bitcoin. It's modeled the same way. And if you can kind of view things in that long-term perspective instead of focusing on the short term, then it makes a lot of sense. So yeah, emissions have never been a concern for me. And someone mentioned what happens when the emissions dry up. And like you said, they're going to go on for over 100 years. I don't know the exact number, obviously, but hundreds of years, they're going to continue. And of course, the idea is that as curve evolves, the price of the token will continue to rise. And so while the number of coins being emitted is going to decrease, the value of each coin being emitted should increase. And that should kind of allow for a continued influx of those emissions, I guess, or the yield, I guess. So yeah, I mean, it's not a concern at all. It's modeled after Bitcoin. If you're bullish on Bitcoin and you don't think that Bitcoin's emission schedule is an issue, then of course, they're not obviously the same, but then you should feel a lot more comfortable with Curve's emission schedule as well.
Yeah, they're not the same because Curve has more active developers and more active products being launched against it.
There you
Well,
go.
like
Yeah.
I got into Bitcoin in 2014, and I lamented that I'd missed that era of like the early days where you could solve a CAPTCHA and get 25 free Bitcoins. So I kind of think of the past 4 years where there's like kind of pretty wild emission on curve pools as like the free Bitcoins CAPTCHA era of curve, where it's like if you were there, if you were paying attention for these 4 years, like you got some pretty good deals, and those days may never come again.
Yeah, I mean, 100% agree, and I mean, the proof is in the pudding with over 40% of total supply or circulating supply locked away in that 4-year lock, and most of those people are relocking. I mean, the proof is there. People with a lot more money than I have are accumulating curve and are locking it away essentially in perpetuity for a reason. I mean, I wouldn't lock away millions of dollars forever unless I thought I was going to get more than that from the yield that it's going to generate. So the proof is there. People clearly believe in CRV, like the early adopters of Bitcoin, and like the early adopters of Bitcoin, they were looked at like crazy people until adoption grew, and here we are today. So yeah, I mean, it's there. Not only do I have confidence in the protocol and its future, but clearly a lot of the biggest holders do, and most importantly, the founder does as well, which instills a lot of confidence in myself as well. Obviously, the founder of Curve has locked his own tokens, what's left of them at least, that hasn't been liquidated, into the 4-year lock, and keeps relocking. And while I say what hasn't been liquidated, that amounts to hundreds of millions of dollars worth of CRV. So it's no small amount to lock away for forever, essentially. And so yeah, it's very clear to me, and I think those who look at the data, that confidence in the protocol is high and has never been higher, and the future, I think, is quite bright.
Yeah, so on screen here, I have Curve Hub, which is showing some stats about the VE-CRV locking. And one of the interesting phenomenon of VE-CRV locking, and just briefly, here's evidence of Curve founder Michael Egorov, who is relocking his massive Curve stash till 2028. So he's super incentivized to like grow Curve VECRV revenues because that's like his biggest stash of Curve. So one of the interesting things in following Curve for some time has been that like the locking, like at first, of course, it was, you know, individuals who just like happened to like be early to Curve and like locked some away. But then over time, it's like moved to a lot of protocols decide to start locking Curve programmatically. So they actually like build protocols atop Curve. So some of the notable examples are like Convex, Stake DAO. You see Aladdin DAO is like building heavily atop of things. Now, about half the Curve has been locked as VECRV, and most of that is Convex. Like, have you been following Convex much? Like, what could you talked a bit about the beginning, but can you like talk a bit more about like your thesis for where Convex is going?
Yeah, so I own a lot of Convex as well as Curve, and I call them. I made a YouTube video maybe 2 years ago, and I call them the DeFi dominators, Curve and Convex. They're kind of like sister coins or twin coins, you can call them, in that there's this flywheel that we always talk about in the Curve space. And the idea is that, like you said, most of the V curve is locked into Convex, which means that Convex controls a lion's share of the V curve, which means they control a lot of voting power. They control where a lot of the curve emissions go. And that indirectly means that when the value of Curve goes up, the value of Convex goes up because they own a lot of it and they control it. So that's what we call the flywheel. When the value of CRV rises, then the inherent value in CVX rises as well. Whether the market prices it accordingly is another question, but the value of the tokens essentially follow each other up and down. And so in a bull market with CRV rising, it's not only natural that CVX should rise, and CVX having an old high of $60 and a current price of $6 makes it, to me, a very valuable buy. And obviously, there's a lot more intricacies to it. You can lock your Convex and earned passive yield like you do with CRV, or almost passive, I should say, because you have to either delegate your voting power to an entity that'll vote for you, or you have to log in once every 2 weeks and make a selection there. But essentially, passive income for all intents and purposes. And so, yeah, I'm just as bullish on Convex as I am on Curve. And the fun thing about Convex is that while Curve still has about 50% or thereabouts of tokens to be emitted over the next hundreds of years, Convex, I think, is nearly fully emitted. I think they have 100 million or 100 billion tokens, if I'm not mistaken. And a
100
majority of
million.
that is already, yeah, a majority of that is already circulating. And which tells me that, you know, we talk about liquidity and float and all these things, and I think that Convex supply is cornered to an extent, just like CRV supply is, and this means that when markets turn bullish and demand comes in, the price accelerates to the upside very quickly. And so, yeah, very, very bullish in Convex, almost equally as bullish as I am on Curve, and I hold both of them in my long-term spot portfolios.
Yeah, so I've got the Convex website up here, and a lot of people in the community liken Convex to the Berkshire Hathaway of DeFi because they just find like DeFi protocols where they can essentially like leverage their Convex token to control governance, usually by issuing wrappers. And they've done very well. So Curve is definitely the biggest one. They control 51% of the governance power of Curve. There's also Prisma, where they have 55%. Frax's FXS, they got 38%, and Protocol FX, which is really cool protocol. If we get to like lightning round time, it'd be interesting to hear your thoughts on that one. They got 46% of that one. So they are like basically like vacuuming up a lot of different power in DeFi. For people who are new, the $100 million is the like basically the cap of Convex. Curve is closer to 3 billion. So you naturally expect, due to the differences in supplies, that they're going to trade a little bit differently. But due to that kind of like quote unquote intrinsic power, because remember, like Curve actually controls real ability to move and push liquidity around. So therefore, a Convex token also controls the ability to push liquidity around Curve and these other protocols. So historically, there's been kind of a loose, like quote unquote intrinsic value, which people have said, which basically means if Curve is at like $1, you kind of expect Convex to be around somewhere like 5x that, give or take. So again, I'm not a trader. None of this has been financial advice and all that. But like, how do you look at the Convex trading? If you see like Convex dipping relative to Curve, do you like suddenly buy a bunch, or if it gets overvalued, do you like rebalance the other direction, or is it just kind of flip below your radar?
Yeah, so that's a great question, and something I see a lot in my Twitter comments because I constantly talk about Curve and Convex. But I get a lot of people that will like Curve will pump 20% in a day, and then people will be like tagging me and saying, "Why isn't CVX pumping? They're supposed to be tied together. Like, why isn't it rising? Are you still confident in CVX?" Like, and I think the key to remember is that while they do kind of have this flywheel effect, these markets first and foremost are irrational, right? We know that because we've seen meme coins and coins with no intrinsic value just pump to insane valuations because of attention, right? So the markets are very rational. And what that means is that even if there is some sort of inherent increase in value of Convex because of a curve pump, that doesn't necessarily translate to an immediate pump on Convex because the markets are not perfectly efficient, right? They're very inefficient and they're very irrational. And so we can get a 60% rally in Curve, and maybe Convex bleeds 10%, or maybe Convex trades sideways during that period of time. There is not going to be a direct correlation necessarily with price of both these assets because the markets are not rational. If they were, there may be, but they're not. And so you get these periods where maybe Curve outperforms this week, or maybe Convex outperforms next week. And that's normal. Over time, over a long enough period of time, I expect them both to kind of pull each other up. But in the shorter term or the midterm, you may not see a direct correlation in terms of price and how they trade. Now, what this also means is that if you're trying to actively switch between Curve and Convex to try and catch their respective pumps because you think that when one gets undervalued relative to the other, they should immediately play catch up within the next week or so, you're going to have a tough time, in my opinion. And this is why I always tell people, they say, "Hey, well, should I hold Curve or should I hold Convex?" Then I'm like, hold both. Hold both. That way, if Curve is pumping this week, you're happy, and if Convex is pumping next week, you're even happier. Like, you cannot miss either way if you're holding both. And so again, they're tied to each other in a way based on the fundamentals, and they will probably pump at different times. Maybe at some point they'll pump together, but we don't know that. And so the simple thing is to just hold both if you're confident in the protocols, and that way you won't miss a pump and you won't have to guess and try and figure out which one's going to pump at what time. Because even I can't do that, and I trade these markets for a living. So
The markets, especially crypto markets, are extremely irrational. But in a lot of ways, I think this actually redounds to people like us and our benefit. Because like, where else do you have the opportunity to like have the ability to like profit so much from information asymmetry? Because oftentimes the markets just do stupid things. But if you actually know a bit about these things, you can like you actually get like a bit of an advantage against the people who just don't know these things. So, study all these protocols. Get yourself like very well versed in them, and you can do some amazing things. So one more question about Convex, which is that lately they've been teasing these videos. Off so it doesn't bother you. I don't know if you've like seen these kind of videos in the timeline and like the euphoria around it. But basically they're like teasing some sort of like new launch which has these like hippo themes tied up with it. Um, as far as I know, there's like only a handful of people who actually know what's going on. They've told me that all the speculation they've seen has been wrong, and that they're like gasted by how cool what is being built is. Um, but we don't know a lot of public details. So, first of all, are you one of these people who actually knows what's going on? And second of all, like whether or not you are like know what's going on, like what's your guess as to what's happening here?
Yeah, so the hippo. Yeah, I've been seeing this on my timeline for a couple of weeks, and it's exciting, and I have no idea what it is. So I wish I knew more, but I'm probably just you. You probably actually know a little bit more than I do because you're a little bit more in the know with the community. But yeah, I have no idea. All I know is that there's a hippo, and the hippo is bullish apparently, and I'm excited to see what it is. I'm not like I'm not one to speculate too much on these things because in this space, when there's an announcement, you never know how legitimate the announcement is or can be. I have no doubt that this is going to be a big one. Knowing what comes from the team, I don't ever see them tease stuff like this without an actual significant development. So it's very rare that I see them post these types of things. And so I'm confident that the hippo is going to be very good for the protocol. So yeah, I'm excited. I'm excited. I don't know what it is, but I'm loaded up on Convex. So whenever the announcement is made, I'm looking forward to see what type of effect that has on the markets, and I'm looking forward to see what this partnership is. Again, if it's as bullish as it seems to be, then yeah, it just means an even stronger fundamental reason to be holding Convex. So yeah, I'm excited for sure.
Yeah, I mean, if nothing else, the hippo memes that have been coming across my timeline have been amazing. I just am cracking up laughing at them. So keep up the good meme work, meme army. Uh, well, I've already kept you for like an hour. So if you have to jump at any time, like please, like feel free to like just bounce off. I want to be respectful of your time. But with like whatever time you have left, it'd be interesting to kind of get your thoughts on like lightning round. Like, are there other tokens within the top 100, top 500 that you like are like really following and interested in, or like tokens that you see that you think are like super overvalued and you think people should be fading?
Yeah, so I've talked about, well, in terms of time, I have as much time as you have. So ready to be here as long as you think we have interesting stuff to talk about. But yeah, in terms of tokens, I've talked about most of them on my Twitter, so it shouldn't be a surprise to anyone watching this. HBAR, obviously, one of them I'm very bullish on. I think it just broke into the top 20, if I'm not mistaken, or at least was in the top 20 a few weeks ago. And I've been looking for that now for a couple of years. So I've been talking about HBAR for I think 3 years now, and made a YouTube video a couple of years ago saying it'll be in the top 20, and we're finally there. And I think that the big run is really just getting started. Obviously, it's had a pretty volatile life, but it climbed from I think 8 cents to 50 cents at the peak, and then came back down to 3 cents. And I think this has just been essentially a long-term accumulation around 3 to 8 cents, and I think we're headed to new all-time highs. So very bullish on HBAR as well. In terms of coins that I think should be faded, if I do think a coin should be faded, it's not necessarily because I think that the coin doesn't have value, but it's more so that I think any coin that has already run 10, 20, 30, 40, 50x in the last 6 months, in terms of ROI, from now until the next end of this bull cycle or for the next 6 to 12 months, I think it's relatively limited versus something like HBAR or something like Curve that is moving up off of a low and as still maybe 10, 20% to prior all-time highs, versus something that has already broken its old highs from wherever they were set and is now up 10, 20x. So in terms of, yeah, like the best assets that I'm looking to buy right now are assets that are still in those longer term time frame accumulation phases, or assets that have not yet moved up much off their lows. And again, for most people, they look at these charts and they say they look like garbage and they're uninterested. And that's the type of chart that I love to see and that I'm interested in, because it means that if the reality is, if Bitcoin has broken 100K now, and if Bitcoin's headed higher, which I think it is over time, over the next 6 to 12 months, and if the market as a whole is seeing an influx of cash, as they say, a rising tide lifts all boats, so everything's going to rise. And if that's the case, then what can you make the most money on? You can make the most money on, in terms of ROI, those assets that are rising off of their lows, that have not yet seen major pumps, versus those that have already pumped significantly, or are at much higher market cap valuations, right? So for me, it's very simple. If a chart looks like garbage, show it to me because I'm interested. And if the fundamentals check out, then I'll probably be a spot buyer pretty soon. Yeah.
So crazy. Buy low, sell high. It's
Yep.
like
Yep.
so it's a llama party, which means the chat is open. If you're following on X or you're following on YouTube, you heard it here. Credible Crypto is going to be answering questions. So go ahead and drop questions in the chat, and I will pepper them in. Uh, your target for Bitcoin, you say you think it's going higher. Like, how much higher are we talking about? Like 110, 125, 250, or is it going to hit a million this cycle? What like are you looking at?
Yeah, so I've previously said and echoed this since like 2018 or so. I don't expect this cycle for Bitcoin to go higher than 300K. And when I say this cycle, I'm talking about what I believe to be the same cycle that we've been in since 2018. So I know a lot of people kind of see this differently in terms of cycles, and some people believe that we've started a new cycle off of 15K. To me, that's continuation of the cycle that we started at 3K in 2018. So from my perspective, as I've said since I think 2019 or so, that cycle that started off of the bottom at 3K, I don't expect that cycle to end anywhere higher than 300K as an absolute max. So today we're at 100K, which was my minimum target all these years. I think we'll probably push higher to 150 at least. And again, this is not to say that we're going to go to 150 in the next month or two necessarily. We could see a bigger correction. It doesn't really matter. Ultimately, I think we are not done with this run. I do think we're headed above 150. And then somewhere between 150 and 300 as an absolute max is where I think we're going to top. And it's a wide range, obviously, because momentum can carry us very, very high if it gets hot enough. But we'll have more insight and clarity to this as price rises. That'll give us more keys. We'll be able to see how momentum is going as price is rising, and hopefully narrow it more closer to like a smaller range once price action develops. But yeah, above 150, below 300, somewhere in between. We'll know more as price action develops.
So the mantra always used to be it was Bitcoin, then Ethereum, then alt season. Do you think that is going to hold up, or do you think that it's going to be like scrambled with the existence of things like Solana, etc.?
Yeah, so I think it's interesting. I think,
Oh, so meme coins first.
yeah, yeah. So it's interesting that as the space kind of evolves, we're starting to see separation almost in terms of cycles for various coins. So the most clear example that comes to my mind is Chainlink, because back in 2017, 2018, when Bitcoin had topped and we saw an alt season post Bitcoin top, Chainlink then went on to run through that bear market of 2018, 2019, while everything else was bleeding, if I remember correctly. And so Chainlink actually ran from essentially during the bear market and then kind of cooled off after it hit a high of 50, $60 or whatever, and then was bleeding ever since. And now it's finally kicked into gear again. But that was the first sign that I saw of like a coin not moving in tandem necessarily with Bitcoin in terms of price action. And so now, obviously, XRP is another one that I think is going to kind of break the chain of Bitcoin and kind of run on its own, because it's essentially been one of the few coins that didn't make a new all-time high in 2021. And that 7 years of suppression is now coming to an end. And so I think XRP is going to kind of do its own thing for a while. And I think then again, we've seen that with memes over the last 6 to 12 months running kind of nonstop when most of the market wasn't. And like you said, we're used to seeing that kind of trickle down effect of Bitcoin, then to other major caps like Ethereum, and then to mid caps, and then small caps, and then memes at the end. Whereas this time we saw an explosion of memes kind of way ahead of everything else. And I do think we're seeing now like a meme rotation. So I think that memes have had a massive run, which is great. But like every single asset in this space, people will take profits, and there will be a rotation of assets that have already pumped to assets that have not yet pumped, just because it makes logical sense to do so for those that want to make money. And so I think memes will probably cool down. This isn't to say that the meme run is over per se, uh, which I've constantly stuck by. I think that memes will have their day again at the end of the cycle once Bitcoin has made its final top and money rotates to everything else again for the biggest alt season that we have yet to see. And I think memes will then have a second wind. But I do think that we're seeing a rotation at this particular moment in time from these major memes into utility coins, which is why we've seen coins like CRV, XRP, HBAR run 400 to 500% in the last 30 days alone, wiping out years of downtrending price action. So yeah, I think we're going to see kind of that same rotation, but at the same time, we'll see outliers like XRP that are going to do its own thing, like Chainlink that did its own thing, in 2018, 2019. So yeah, it's getting to a point where not everything is necessarily going to move towards this sort of structure that we're used to, but I think the framework is still there. We're going to see some things kind of break that framework though.
Okay, so there's a lot of different tickers that are being asked about. So I'll just toss a few of them your direction, and feel free to pick up any you like. So there's questions about, let's see, dot. We've got questions about ICP. Uh, we got questions about the all-time high next year time frame for all-time high for things like Curve, as well as like price scenarios for Curve and Convex. Well, let's go ahead and start. Any of those got strong opinions on?
Yeah. So in terms of all-time highs for Curve and Convex, hard to say. I think it's going to come a lot quicker than most are expecting. Um, because anytime you have an asset that's been beaten down to a pulp like CRV was at the bottom of the bear market, and you have that sort of long drawn out bleed or consolidation period, the expansion that follows is aggressive. And the longer that we consolidate and that we bleed prior to this expansion, the more aggressive the expansion is. And so a coin like CRV that was launched in, I believe, 2021 and has been almost constantly downtrending besides that initial rally to $5 to $6, has had a lot of time for that bleed to take place, and therefore a lot of time for holders to accumulate the coin. And so the float should be relatively low. Liquidity of, or I guess available CRV on the market should be relatively low. And so when price does start rising like it is now, things just go very, very quickly. So I mean, as you can see, I think it's been a month or 2 months and we've wiped out all the downwards price action since 2022 for 2 years. So I think the climb will be faster than most are expecting. It's hard to give you a exact month or something like that, but yeah, it's just faster than most are expecting. And all I will say is that if you are holding spot CRV, don't get caught up in the lower time frame price action, because the a massive move is coming, in my opinion. And so you just want to hold and sit tight, because odds are if you try to actively trade your spot, you'll probably end up in a worse scenario than you are in now. In fact, there was someone who commented on my Twitter literally today or yesterday and said that they sold a bunch of their CRV at $1 and they try to buy back lower, and now they're scrambling because it's pumping and they're asking, should I buy in now? Should I wait? And this is again why I've always said, keep your spot and trading portfolios separate for this exact reason. Because when the markets heat up like this and curve is pumping and you try to actively trade your spot holdings, the emotions that are going to come with that are, number one, not going to allow you to actually trade it profitably. And second, if you're not a professional trader, your odds of you trading it profitably to begin with are low. So keep your spot and trading portfolio separate, so that in this situation, you're holding on to your spot and you're letting the market work for you. And no matter what happens, you're not going to miss the move to all-time high because you're not touching your spot. Meanwhile, you have a trading portfolio where if you actively want to try and trade the smaller time frame moves on CRV, you can do that. But if you completely mess up on that portfolio and you sell at $1 and now we're at $1.50, you're not in a position where you have to decide whether to jump in after a potential 50% pump or miss the run completely, because you have your spot sitting on the side that hasn't been touched. So that's kind of what I think about that in terms of, timing wise. It's hard to say. Just hold on and enjoy the ride while it happens. And yeah, I think, what were some of the other questions that
Let's
we can
see.
cover?
Polkadot, DOT, and some questions about Cardano,
So Polkadot,
HR.
yeah, so Polkadot and Cardano specifically, I don't hold either of them in my long-term portfolio. I'm not super well versed in their fundamentals. I've looked a little bit into both of them, but personally, again, because I'm not well versed in the fundamentals, they're not long-term holds for me. I'd happily trade them, and I would not be surprised if either of them or both of them see new all-time highs, because again, a rising tide lifts all boats, and as long as a project isn't a complete scam or a rug or anything like that, it should rise with the rest of the market in the coming months. So yeah, I think they can reasonably see very high gains. I of course won't enjoy them because I'm not holding them, but that's again because I don't have a deep understanding of them fundamentally.
Yeah. Seeing some people asking about Velodrome, VELO. Thoughts on Velo?
I have heard of it, and I know there's a very passionate community behind it. They use a mechanism similar to Curve when it comes to locking, I believe. And so similar structure, I think fundamentally. I know there's some key differences as well. And if I'm not mistaken, they're built on base, I think. And so they focus on trading on base, if I'm not mistaken.
No. Aerodrome is focused on base. Velodrome is focused on optimism. So they
Got
have
it, got it. Okay,
different
that's right,
forks on
that's right.
different. Yeah.
Yeah. So I don't hold any myself. I have heard of them. I'm familiar with them, and I know that they have certain mechanisms that are similar to CRV. but yeah, I don't hold them, and they are relatively new tokens. And anytime you have a relatively new token, it's kind of hard to price it because there's so little price history on which to base things off of. And again, just like CRV in its initial years, I think the emissions are quite high on them, which may be a factor to consider in terms of price appreciation in the short to midterm. But yeah, it's from what I've heard, they're good protocols and they have a place, I believe. I just personally don't hold them.
Yeah, they seem like they're doing very cool things. I've come across them periodically. So it started as a Liquidity fork, and Liquidity was this sorry, not Liquidity, Solidly fork. Solidly was this protocol infrastructure that was built out by Andre Cronje, who's like an amazing developer. He was trying to basically build VE33, where he tried to combine some of the best features of Curve and Uniswap and Olympus DAO at the time, which is relaunching, which is kind of a funny story. And they basically the Velodrome Aerodrome team took it and kind of ran with it, and they've layered on some like cool things like some Slipstream. So it definitely worth checking out. So it could be some interesting stuff there. There's some questions about Hype, Hyperliquid. Were you part of the Hyperliquid airdrop?
I was not. So I did trade on it one time for CRV long, funny enough, because I had maxed out my position size on the SEX that I was using. So I had to use another platform. So I did use it to trade CRV. I did not get the airdrop, lucky me. So I missed out on the airdrop. But when I used it, it seemed like a friendly, user-friendly perp platform. I was able to trade on it with no issues. So I like the product for sure. In terms of valuation and upside, I haven't done much research. Obviously, the token has been skyrocketing since the airdrop. But yeah, I'm probably not the right one to ask about it from a technical perspective. The chart's pretty much up only, so there's not much that I can tell you that you're not already seeing in terms of technicals. But yeah, I don't hold any. I do like the protocol though. I like the product that they have.
Yeah, there's kind of some related questions, which is just more about like, where did you learn to trade? And if people are interested in learning to trade themselves, like, where should they go? Are you self-taught? Are there like interesting resources that you could point them to?
Yeah, so I learned to trade over the last 7 years. I often get people ask me what books should I read. I haven't read any books on trading, so most of it was picking up stuff off of Twitter, off of YouTube, off of the internet. Essentially, the only book that I've ever read on trading was to do with Elliott wave analysis, which is still to this day the backbone of a lot of my analysis and my trading. So it's worth reading. It's called Elliott Wave Principle by Frost and Precher, and that's the one book that I've read on I guess trading, you could say. But honestly, that book is more so about market cycles, and yeah, if you want to get a macro view of market cycles and how to interpret them the way that I do, then you will want to read that book. It's not so much about necessarily actively trading on lower time frames per se, but it's kind of the backbone of a lot of my analysis, and a very, very useful and valuable book. Other than that, everything that I've learned off of Twitter, off of YouTube, off of staring at the charts for hours every single day, off of trial and error, and just jumping into the trenches, as they'd say, and just doing the work myself, and trading actively day to day. So there is not much that can replace real practical time on the charts. I know a lot of people will say, what can I read, or what what resource can I use to learn how to trade? And the reality is, you'll learn most of if you really want to be a successful trader, you'll learn most of what makes you successful by staring at the charts and trial and error, testing out. You'll go on Twitter and you'll find 10 different methods or strategies. So you try out different things, you see what works for you over time, you refine that process until you're doing it yourself and you've kind of created your own system. So I have my own system that's kind of probably unique to myself and maybe whoever follows me and learns it, but everyone will have their own system, and you basically just do what works for you after trial and error, after a period of time.
All right, this might be getting too far in the weeds, but I'm curious to hear this one as well. Any thoughts on Protocol FX? Have you heard much about them?
Yeah, I've heard about them, and I have tested the protocol out, and I think it's really cool. Yeah, so it's allows you to have leverage positions that are like not unable to be liquidated, or they can be liquidated, but those are in very extreme circumstances, from my understanding. I think that protocol definitely has a place in the space. I think it's a really cool product. I think that I know that they're new and they're lacking exposure right now, and I think that's probably the biggest thing that they're struggling with. But I think that the product itself is fantastic. I haven't seen anything else like it in the market, and it's exciting. Like I see the value in it, and I look forward to using it more in the future. I actually the only reason actually I was considering using it for my CVX because I'm very bullish on CVX in the coming months, and I think we're going a lot higher. And to me, it was a no-brainer to open a non-liquidatable leverage position. The only reason that I didn't do it was because of tax purposes. So the swapping between tokens can cause a taxable transaction to occur, and that's the reason why I avoided it. But if that wasn't the case, I would have used it in a heartbeat. I think that it has a place for long-term holders, and I think there's definitely value there to be had. Yeah.
Yeah, so just to kind of walk through the mechanics of it for people who are a bit unfamiliar, the idea is they take various tokens, so Ethereum, Bitcoin, Convex, and they will essentially cleave it into two tokens, one of which will be a stable coin, and then all the volatility that you would get just gets piped into this kind of leveraged version of the token, which is like, for someone like me who doesn't like, I can't trade. Like these markets are 24/7; they're impossible to keep up with. So I can't like sit there and like be set alarms to wake up at 3 a.m. to like trade these tokens or like build bots to do it for me. So I'm just like long-term Bitcoin. So I just like buy XBTC. Right now it's like de facto is it 1.885x leverage. That will fluctuate, but you basically like have a very passive way of holding it and getting like more exposure to Bitcoin. So it works great for like someone who's lazy like me.
Yeah, it's I think it's great for people that are not necessarily actively day trading. It's a fantastic tool for those people who want to get some sort of leverage exposure but don't have the time or maybe the knowledge to actively trade on a day to day. And it's a lot easier. And for most trading is not something you can learn overnight. It's not something you can learn in a week or a month. So for a lot of people who are bullish on the protocols and want to get involved but can't actively trade, you're probably better off doing something like this where you just let it sit, and it's obviously a low amount of leverage. It's not like a 10x or a 50x or whatever you're going to get on centralized exchanges, but that's honestly, people shouldn't be messing with that anyways that they don't know how to trade. So it's a relatively safer. I won't say it's like a safe because it's hard to gauge risk, but it's a relatively safer alternative to using a centralized exchange and those wild amounts of leverage when you don't actually know how to use that type of leverage or you don't actively trade. And it's good because you can just kind of set it and forget it until you're ready to cash out. Of course, there's obviously smart contract risk, as there is with any protocol, and I would say that's probably the biggest risk when it comes to this type of thing. But if you're okay with that, or if you've planned for that, then it's something worth considering. Just understanding the risks that come with smart contracts and those types of things.
Yeah, and they're also launching their V2, which is something I've been following pretty closely. And on top of it, like their tokenomics are pretty sound. There's not that many FXN tokens underlying it. Also, like if you have Convex, FXN is one of the like tokens you have like exposure to. So yeah, we'll go ahead and leave it at that. But do some research, people, if you're following this protocol FX. Very interesting stuff coming out of them. What about this question that just popped in from Crispy Seaweed? Rather than like talking too much about like that specific, which is the rumor of crypto becoming tax-free under Trump, like what's your just general thoughts on like how much of this market is being driven by like changes in regulation stuff that might happen with the United States? Because I mean, I didn't think that like the election would actually have like major consequences, and then we saw that like Trump got elected, and all of a sudden like Bitcoin just basically did a quick 2x. So I was way wrong on that. Like clearly there was some kind of Trump pump. Has all the potential like regulatory changes been factored in already, or is it like overhyped? So like what's your thoughts on how regulation might play out with these things to come?
Yeah, so I think that obviously having a pro crypto administration is going to be very bullish for the next 4 years. I'm excited about that. Obviously, I think anyone in this space is. Um, I would hope that it's going to be all that it seems it's going to be. We think that it's going to be very bullish for the space, and I'd hope that's the case. But yeah, it's hard to gauge these things like the Trump pump. Like I've been saying for months now that irrespective of whether we get a bigger pullback, 100K plus is coming, and I've been saying that at 10K, 20K, 30K, 40K, 50K, 60K, 70K, 80K, whatever, right? Like it's going to happen. So whether this Trump win accelerated that, maybe cut short a potential dump and we just skip to the pump, or whether it had a bigger influence is hard to say. There's a number of factors. Like I said, at the end of the day, it comes down to supply and demand. And like I mentioned, long-term holders that control the majority of the supply are the ones that are, I think, ultimately pulling the strings. And of course, the idea is that if you're controlling 70% of the supply, you can kind of offset, like we've seen recently, you can offset these major massive buys if you really wanted to. The strategy is obviously not to dump the markets into oblivion, but rather to sell as price rises so that you don't affect the markets too negatively. So there's I think bigger things at play. I do think that the win probably had an effect on the demand side of the equation. I'm sure some people decided to buy more crypto because of the win, because of Trump's win, and so maybe that increased demand then pushed price up. Whether or not that could have been countered or was countered by sells on the opposing end from these long-term holders is something that we don't know. But yeah, I think it was an inevitability that we would have seen this pump, and whether or not we can attribute that solely to Trump, I don't know. But to me, it doesn't really matter. We got the pump that we were expecting ultimately, and like I said, I don't think it's done yet. So even if we see a bigger correction here, I don't think it's the end of this cycle. And I think the next 4 years, hopefully, should be all that we're expecting them to be, and should be very bullish for this space, not just for Bitcoin, but for our altcoins and other assets as well. So I'm hoping for the best. Yeah.
Have you followed much with the World Liberty Financial and the fact that they're essentially like creating an Aave V3 instance, of which about 20% of its revenue and 7% of its supply would be dedicated back to Aave?
Yeah, I have been following it a little bit. I personally am not too in the know about that stuff, but I have some people that I chat with in the space that really understand it and kind of keep me up to date. I appreciate them for that. So shout out to Crypto Condom for keeping me up to date on this type of stuff. But yeah, I believe he did. My understanding, yeah, he did buy Aave and he bought Link as well. And I mean, that's a bullish sign. I think he probably sees what we see and understands that the upside potential for a lot of these tokens is significant over the next 6 to 12 months. So, and it just makes sense that if he actually literally has a vested interest in these assets now, that the coming regulation should be favorable to them. It just makes sense. So it increases the odds that we're going to see a good couple of years in this space, I would think, in terms of regulations. And yeah, it's exciting to see for sure.
Got another good question, which might be a good one to close on. Would be like, are there any other coins that are in your radar which might be interesting for new spot buyers?
Yeah, so I am not. There's nothing that I can tell you off the top of my head that I haven't already spoken about. But what I will say is I'm actively looking at this point for new potential spot buys in the space. Like I said, show me a chart that looks like garbage, and I'm interested because that's where you're going to get the 50 to 100x gains at this particular stage in the market. And so I'm actively looking and keeping an eye out for charts that are down a lot, that are forming or have already formed or maybe just completed long-term accumulation bases, that have been kind of trading in a tight range at the lows for a year or 2 years that are now breaking out or that may break out soon. If I see a chart that looks like that, what I'll then do is I'll then look into the protocol itself, try and understand what they're all about, understand if there's a narrative there, or understand if there's fundamentals behind that protocol that makes me think that it will survive for the next 6 to 12 months or maybe potentially thrive in this environment. And then I'll deploy spot. So I don't have anything off the top of my head yet, but if there are charts that are up at new all-time highs already after going up 10, 20, 30, 40x off the lows, I'm probably not interested in those at all, to be frank. What I am interested in is the ones that haven't yet moved, like Curve, that'll do 400 to 500% in a number of weeks or days. And that'll ultimately, I think, do 10, 20, 30x over the next 6 to 12 months. So that's what I'm looking for. I don't, like I said, off the top of my head, have any yet, but if I see some, I may talk about it on Twitter if I decide to buy a bag. But yeah, that's, I think, what people should be looking for in general as a framework to the coins to invest in at this particular point in time.
Wanted to re-up the shout out to Crypto Who. That is none other than the great Crypto Condom, who keeps all of us safe, saved my life during the bear market. I think we all owe a huge debt, so make sure to follow Crypto Condom if you haven't. Okay. There's another question I wanted to get to before we maybe bounce. It's almost Christmas, and a lot of kids are asking, do you believe in super cycle?
Yeah, so no, I don't believe in the super cycle. I guess it depends on what you consider a super cycle. Like, do people consider the run in traditional equities from the 2008 collapse till today a super cycle? Because if that's a super cycle, then yes, I believe in super cycles, right? But in my view, that is one very large and long secular bull market in traditional finance on tech stocks, and it has its place. But I think that anytime you get a secular bull market of that length and magnitude, what follows is going to be a secular bear market, so an equal and opposite reaction, and that applies to every single market. So the super cycle, depending on how you interpret it or how you describe it, generally I say I don't believe in that, because I think that every massive bull market and it will be followed by a massive bear market, and the more aggressive that this bull market is, the more aggressive the next bear market will be. If we go parabolic here in the next 6 months, then we're going to get a massive crash that follows. It's just the way that it works. Anytime we get a parabolic rise, you get profit taking. In this case, an example for why I say that a parabolic rise on Bitcoin could lead to a massive crash is because if you look at the logic behind this, again, we talked about those long-term holders, the diamond hands guys that hold 70% of the supply. What tends to happen is they sell as price rises. When we go parabolic, they're dumping Bitcoin, and it happens every single time. And who are they dumping it to? They're dumping it to the newcomers in the space. And the newcomers are not diamond hands. The newcomers are not savvy investors. The newcomers are very emotional. And so what happens is price goes parabolic. The supply shifts from 70% into diamond hands to 70% into paper hands. And what happens when 70% of the Bitcoin supply is held in paper hands at a valuation of $200,000 per Bitcoin? When the first correction comes, all the paper hands start selling, and now you get a massive dump of supply on the market at insane valuations, and you see a massive crash because paper hands don't like to hodl, and they sell. It's just the way that it works. And so this repeats. Then the paper hands sell the highs, you get this massive correction, this massive crash, and guess who's buying? The diamond hands again. The process repeats. We get a big bear market, accumulation cycle, and then we repeat the rise. So yeah, anytime you get a massive bull cycle, you're going to get a massive bear. And so that's the only reason why I don't necessarily like the verbiage of super cycle, because it kind of implies a never-ending rise, which we can get that if we don't get these parabolic blow-off tops in between. If we simply grind up like linearly over the next 20 years, sure. Is that going to happen? I don't think so. Are we going to get these massive rises in between and massive crashes in between? Yes. So that's kind of why I don't like the word super cycle. To me, in my head, super cycle means linear rise over the next 20, 30 years, which I think we're going to, over a long enough time horizon, we'll get that sort of rise, but we're going to get these massive dips and massive pops in between. So that's kind of the way that I see it.
Yeah, well spoken. In other words, like market cycles are undefeated. Like, we're always going to have boom bust cycles because we're humans. It's only human nature. CrediBULL, any final like things that I should have asked you that I didn't, and you'd like to just shout?
No, I think we covered it all. I think I loved having this chat. It was a great time, and hopefully the viewers learned something about Curve new today. I think there's a lot of misinformation about the protocol, a lot of misinformation about the emissions, about the way the protocol works, and hopefully people learned a thing or two from this protocol and kind of understand it better. As always, guys, none of this is financial advice. Do your own research. Really understand these protocols before you decide to pull the trigger on a buy. With all crypto, it's a high level of risk, period. So make sure you understand the protocol that you're buying or investing in. And yeah, I appreciate you having me. And again, of course, follow me, guys, on Twitter and YouTube. Other than that, I think that about covers it.
Yeah, and one kind of piece of education I'd like to just drop out there is, if you've been paying attention or following this, take a minute to subscribe and follow Leviathan News. So on X, you can just find it because you're probably streaming it, Leviathan_news, as well as on Telegram. The link on screen here, you can get all of our links because we also got Spotify, YouTube. What you can get if you follow us, we have a crowdsourced news. Essentially, we're decentralizing Bloomberg. So we have a wide community of degens out there following all the crypto news, submitting headlines, and trying to do so to earn our native squid token. So we've figured out how to basically use Web3 incentives to deliver the highest quality, fastest, and best source of crypto information. I'm not a trader, but a lot of people say they like to use it for trading signals. So, again, talk to your lawyers, do your own research, but a great place to get started doing that is here. If you're interested, we're also conducting an auction for our Squid Pass. So take a look at all of our pinned tweets to learn a bit more about that. Other than that, you can find me at CurveCap. I follow Curve stuff. And we appreciate everyone who was taking some time to be here. We couldn't do this without you. We're going to get you some squid for appearing on the show. And Other than that, why don't you go ahead and take us out?
All right, thanks. Appreciate it. And yeah, looking forward to more of these in the future, maybe. And yeah, guys, give us a follow on our socials, and we'll catch you guys later.
Absolutely. Come back anytime. Squids, catch you all next tide.